How's it going, everybody? Welcome back to another video. In today's video, we'll be going over the breaker block model, my favorite model. I love this thing. I'm going to try to explain it in the best way I can. But basically, it's very similar to order blocks on where you're going to be looking for a higher time frame point of interest to sweep or wait for price to react within that range. And then you're going to wait for price to form another CISD or market structure shift as an added confluence, and then look for your retracement back up into a range. So breakers are a little bit different, but breaker blocks and order blocks technically or typically do overline depending on how you trade your order blocks. Like if you're going to trade your order blocks on the entire range of liquidity that sweeps liquidity, that's technically the manipulation leg of a breaker block. So basically they all play into each other's parts. That's why I like both the breaker block and the order blocks. There's just a lot of confluence within both of the strategies, so they're both very valid. So let's just hop right into it. So for a bullish breaker block, you're going to look for a swing low, high, lower low, and a higher high. What do I mean by swing? A swing point is basically a 3-candle pattern where the low is the center candle. So as you can see, this candle to the left and right are both higher lows, and this candle in the center is a low. So you have a swing low. Again, here you have a lower high and a lower high. Center candle, you have a swing high. Then you go down here, no swings throughout here because you can see this is a lower, 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 and then again here you have a higher, higher compared to this low. So you have a swing low, swing high, swing lower low, swing higher high. So again, once you form the swing higher high, it's very similar to an order block. If you already know the order block, this should be pretty simple. But basically once you form this CISD above this swing high here, you want to look for retracement back into a range. So in an order block example, you would look for this range here that sweeps liquidity, or the candle itself that sweeps liquidity. But for a breaker, you're going to look at the low and high. So it's basically just going to be the range that it gives you from this low to high. In this case, it's this green candle here. So again, for a bearish one, it's going to be the exact opposite of a bullish one. So you're going to look for a swing high, swing low, swing higher high, swing lower low. So again, for a bearish one, you're going to form a bearish CISD. Bullish one, you're going to form a bullish CISD. Just to, again, an added confluence into that entry. So again, here you have this high, low, higher, high, lower, low. So again, from this low to your high, or I'm sorry, from this low to your higher high, this is basically just your manipulation leg. And then also your order block. And then again here, your lower low is going to be your confirmation, which forms your CISD and market structure shift, where then you can look for a retracement back up into this range. And again, your breaker range is going to be from your swing high to your swing low, which in this case, it's going to be this middle candle here. And then how would I look to enter off of a breaker? I'm going to look for any fair value gaps that overline after creating this market structure shift or CISD. That's honestly my favorite entry model off of breakers, is just overlapping with fair value gaps. Or you can either look to set your entry at the very beginning of the breaker or the median of the breaker, just kind of how you would an order block as well. But let's hop into some live examples. It'll make a little bit more sense on what I mean by what the breaker range is and kind of what the confluence is compared with an order block. So yeah, let's hop right into it. Alright, so I'll open some live examples going over some breaker blocks here. So the first thing I'm going to look for is obviously a point of interest or something to sweep. So it's kind of the same thing, kind of the same lines of order blocks. So again, I'm going to look for, like in this example, we have an hourly fair value gap here. So as you can see, this is already mitigated. So oftentimes, a little tip on how I treat mitigated fair value gaps is I just chart them out from the mitigation. So I'm basically only going to be looking at now this range instead of this initial 162 range. I'm going to be now looking at this range from 141. Saves me about 20 points. And then breaking it down from there, we can go to our 5-minute. And now I'm just going to wait for some sort of reaction within this, basically this yellow range here. And then we're going to wait for a CISD to form. And basically for a breaker, you're going to look for the low and high that is formed within the range. So in this case here, we have the low, high, lower, low, higher, high. So here we would look at the low and high is going to be our breaker range, which is basically this range right here. And then we can break this down. We can go down to a lower time frame like the 3. I like trading breakers on the 3, going down from like a 15. From a hourly bias down to like a 15 5-minute confluence, then entry on the 3-minute. That's just kind of how I've just been trading my breakers recently. But then again, your breakers entry is going to be at the top, stop at the low, and then again, you just want to see goddamn, you just want to see price support this low that is put in from your swing low, basically the first step of your breaker. And then basically for our TPs, we're gonna look for, let me see, this all looks easy to run. Okay, wait, this looks free. Equal highs up here, this all looks free as fuck to run for 260 points. And then for breakers also, you can align other components as well, like some fair value gaps within the ranges, just to support price as well. We can continue to play this out. We get that expansion to our TP. Alright, so hopping into another example about breaker blocks. We're here on ES on the hourly. And then same thing, I want to look for some sort of area for price to react around. So we have this swing low that we're approaching after basically switching trends. So now we're bearish. And then basically I'm just going to look at this range here of this unmitigated fair value gap to support price. Basically just a little range from 833 to 835 on ES. So I can break this down to the 5 minute. And basically all I'm going to look for is for price to sweep 835 and form some sort of either market structure shift or CISD above, or if we don't, continue to displace through these lows. So we do create this sweep, so we come down, support it, and then sweep out these lows here. So what I'm going to look at after sweeping out the lows is I want to see price come back up and take out these highs. So you create the low, high, lower, low, higher, high move. So we have 830, most likely news comes out at 830, so it's basically why we have this higher high move here. So then what I'm going to look at for my breaker is going to be this low and my high. So it's in case it's going to be this range here. And then for an order block, just a quick little reminder, it's going to also be this range here. So double confluence, that's also why I like breakers a little bit more than order blocks. And then going on from there, I would look at my entry at the top, and then look at my stop at this low, and then I could look for, I'll just look for London high. Slow this down a little bit. TP hit. Alright, so basically hopping in another order block. Alright, so hopping into another breaker block example here. We're hopping into a bearish example. So we're on NQ on the 3 minute here. We just got out of New York Open. So out of New York Open, you normally do see manipulation. So what does that mean in terms for a breaker block formation? It's basically this high, low, higher, high. Where can you expect now if you're going to expect manipulation of New York Open? You can expect that we're going to start to rotate for a lower low after taking out some form of liquidity. So in this case, we did take out these pre-market highs. So what can I look for? Is one, I'm going to chart out this breaker. We have yet to form it. To form it, I'm going to look to close below these lows here. Basically the candles that come up and sweep liquidity to form that CISD or market structure shift. And then again, another confluence for that is to rotate for these relatively equal lows down here as well. So we can speed this up, or play this out. So as you can see, we do get this close below, and then right after we get that close below, we do get this retracement back up into this range. And then you can look to take shorts. I actually remember taking shorts here on a previous day. I actually took shorts right at New York Open at this one tick 140. I took this on ES actually. I took it on ES. But anyways, besides the point, you could look for these lows down here. Same with this one. From that breaker. TP hit. Alright, so hopping in another example. If I'm going to want to form a CISD or basically a breaker and order block, what I'm going to look for is basically price to close below this low in this case. So you can see we are showing weakness above these highs here. So oftentimes when I look at it like this, I like to drop down to a lower time frame and basically just wait to see how price reacts below this low. And then basically if I am expecting it to be bearish or I'm anticipating bearish, I pretty much preemptively draw this out, that we are going to close below this range here, because it will look differently on the lower time frames, because obviously we charted out a little differently, but I'm going to keep on the 5-minute narrative so you can play this out a little bit, see until we form the CISD. Form our 3-minute CISD here, and now we get this close below, so then this validates this 5-minute, so I can go back to this 5-minute here. We can go to 3-minute actually. Just kind of skip through it a little bit, but as you can see, we have this high, low, higher, high, lower, low, and then going from there, I'd look at my entry here, stops above the high here. I could look for, do have relatively equal lows down here, so I'm gonna look for that as my TP. I'm gonna go to 5-minute here and play this out. Speed it up a little bit. And TP hit. Alright, so hopping into another example on breaker blocks here. We're going to go over another bearish breaker block example. But for this example, I want you guys to kind of just pause and find the example. So I already charted out our higher time frame level that we were looking at, and it's this hourly untapped fair value gap with all these equal highs that I wanted to run. So as you can see, we do have the valid sweep. So looking at the chart here, where would you place your breaker range? You can pause it and just kind of like visualize it here. So how I would do it, again here, I would look at this range here from our high to our low, because again, for a bearish breaker block, you want to form a high, low, higher high, lower low, and then that lower low is basically just forming your CISD and market structure shift, confirming basically 1 year bearish trend into your bearish breaker block and order block. So then again, what would I look for as my entry? I could either look for this fair value gap and this London high, which honestly looks the best. Oops. So I'll just set my entry right there at the stop, or at the start. Set my entry, my stop. God damn, I'm tripping up. Set my stop at the highs here, because I want to see this hold price. And then again, where would I look for my TPs? Let's see. Let's look for these lows down here. Honestly, let's look at this for value gap instead. Squeeze a little bit more points out of it. 65 points. Speed this up a little bit. Gold does move a little slower. We tagged in. We get our TP. Alright, so going over a quick little last example here of just some higher time frame breaker examples. We should just kind of like spray these out, just because mainly this is just kind of like spitballing at the end of the video, just for like where I see the market going the next week. Basically just going to start rotating for these 20,370s. Want to see this next week, Monday, kind of Tuesday, rotate for this 20,954. But on Monday, I could see expansion higher into this 4-hour breaker. It's a little bit of it's kind of a scuffed entry, but we do form this swing high, swing lower low, swing higher high, swing lower low. So again, from that, it's going to be this swing high, swing low is your entry range for your shorts. And then again, where I would look would be the fair value gap as your entry. So honestly, I do see expansion higher into 447. I could see that through Asia and London on Monday, or technically Sunday night. Set stops here, and then look for these lows for 1,000 points. Not actual realistic trade here, but honestly, it does look pretty fire. We do form that breaker. Looks pretty good on the hourly as well. Looks good to continue to hold below these lows as well. Could see expansion higher into like 520s to still hold. Like I could see even in like a short ad here for 50 points. Could go for a little sniper entry and look for not the full TP, but look for about that low there. With this inverse for value gap to still hold this breaker high. still looks pretty good. But basically, this whole yap session just kind of, I do see the market kind of starting to rotate. Even after this kind of bullish close here, we are respecting this mitigation block here, especially off the median. Another example as well. Just you can trade breakers and order blocks on any fucking time frame you want. Like, you literally just saw me chart out a daily mitigation block, like you said, or like I said in the order block video. Trade mitigation blocks on the higher time frame. You can see right there, and then again breaker block on the weekly. We have a high, low, higher, high, lower, low. And then I'll give you guys a little sauce if you guys don't know standard deviations for your manipulation leg. Then you could look for -4. So honestly, if we do rotate and it's starting to look a little ugly, cheeky 7,000 points. Alright, so hopping into another example here. So if I wanted to see us form a breaker block around here, I would like to see us come up to this form of liquidity or some form of liquidity down here and sweep and form a CISD. So just off of looking at the charts right now, what can we see? We can see that we form a swing high, swing low. We're working on possibly forming a swing higher high after coming up to sweep potentially these relatively equal highs into this fair value gap. And if we do come up into this range here, I would like to see us either A, sweep, or if we don't, we close above, we continue on higher, we can see a reaction off of this order block here. But if not, we sweep, and then I would like to see us come down and close below the candle low. So we have this high, low, higher high, lower low, basically forming the lower low and the CISD and market structure shift off of this, breaking through this line, which would also validate the breaker, which is going to be in between the low and your high, which basically this candle right here. And then we can play this out, see if this does get valid or not. You can see it does. And then again, you would just look for shorts within this yellow range here. So I can set my entries at the top, and then I'd look for the breaker high to be supported. In this case, it'd be all the way up here. Or you can even have a sniper entry, just kind of holding the breaker range itself. And then I would look for, in this case, I would look for, honestly, yeah, these equal lows. Typically, I would just look for the 830 price because I could see us bounce off of 830. Yeah, it's equal lows. I'm just gonna look for the equal lows down here. 175 points. You do get that displacement.